Yo, investing family, back at it once again. Your favorite entrepreneur, your boy, official Tyree Samuels, right? And today, as usual, we're back at it again with another Forex setup that you guys had 100% the opportunity to be able to take advantage of if you tapped into my free signals chat that I told y'all about on previous videos.
Are these free?
So if you guys want to be able to see why I did it, how I did it, and how many pips we caught, y'all make sure y'all stay tuned for the next clip. I'll see you guys in a little bit. Peace. Yo, everybody, back at it once again. Favorite entrepreneur, your boy, official Tyree Samuels. And as I told you guys in the earlier clip, we're going to be talking about how to be able to get to this money with a signal that you had the chance to take. If you took it, I personally have no idea. But before we even dive into all that, right, let's go ahead and make sure that y'all do the smart thing. Let's make sure y'all do the righteous thing and then go ahead and hit that subscribe button, because the thing I don't want to happen is I don't want you guys to be able to miss out on the value that I'm be dropping every single day moving forward. And then while you're at it, the subscribe button is not too far away from the like button as well as the thumbs up button. And then go ahead and leave a comment if you guys feel like you got something positive and beneficial from this video. Now, without any further ado, okay, we're about to go ahead and get into it. And we're going to get down to the nitty gritty, okay? So the setup that we're going to be talking about, as you guys saw on the thumbnail, is going to be USDJPY, and we actually took a long opportunity. Now, if you guys have been on the channel for, a good amount of time, you guys will actually remember I actually sold USDJPY about a week or so ago. I'm actually put the video up here in the corner so you guys can go back and rewatch it. So now you guys already know, right? The same way you can make money on a sell or a short is the same way you can make money on a buy or a long. Now let's go ahead and dive right into it. So the thing I usually like to be able to do is I like to be able to take advantage of something called the replay tool, okay? If you guys have no idea how to use the replay tool, what I recommend is you go look right up here again. I actually made a video showing you guys how to be able to use the replay tool so you can properly back test the right way. So the thing that I personally like to be able to take advantage of whenever I'm using the replay tool, actually, let's not even use the chart that I have marked up. Let's go use a fresh chart from a different data feed so that I don't have to mess up the markup. Excuse me, I do apologize. So let's go ahead and do that one more again. So let's go ahead and take the rewind tool. Okay. Bada boom, bada bing. We go hit them with that right there. And yeah. So the thing that I always stress to people is you need to define and determine what trading style works for you. Okay. So I trade a couple different styles, but my personal style is just my personal style. It's kind of like a chameleon version of a few different things added together. So whenever I'm personally looking to be able to take opportunity, my favorite time frame is going to be the 1 hour. So you need to identify what's your favorite time frame. My three favorites are 1 hour, 4 hour, and daily, just because they're going to give you the best overall structure of the market because it's based off a higher time frame, right? So when I'm actually flipping through the 1 hour time frame, the thing that I usually do is I usually do not look outside of what I can see on that time frame. So say, for instance, the 1 hour stops right here. I don't need to look any further over here, right? Because all I need to see is on the 1 hour time frame. So from the 1 hour time frame, I can pretty much get the information that I need. If I do 4 daily, obviously it's going to give me a broader range. But for me personally, I don't necessarily have to take advantage of that to a certain extent, just because I know exactly what it is that I'm looking for. So based off the 1 hour time frame, there's a couple of things I like to be able to pay attention to, right? So first thing we can actually look at is we can look at the overall, trend of the market. So if we were to actually take it right from the basics, the overall trend of the market is going to be an uptrend. Okay. How do I know that? If we guys actually look at the flow of the market, right, we can see the market extended, pulled back, extended, pulled back, extended. Now, the thing that we see here is the market ended up clearing this high, right, before it ended giving a tremendous drop of about close to 300 pips. Okay. So with that, I now can actually see that the market might now either be doing a deeper retracement into the overall bullish move, which originally started from here, or it could just be showing us that now it's about to just start doing a completely bearish momentum. And we might be able to have the opportunity to do that. But I'm personally looking to stick with the trend in this specific opportunity. So we see that we do have a long opportunity just because of the overall trend of the market, which I already pointed out is bullish. Okay. So now that we pointed that out, the next thing we want to be able to focus on is do we have things that make sense for us to look for bullish opportunities? Okay. I would personally say yes. Why do I say that? Because if we come back to the 1 hour time frame, one of my favorite things to be able to see is an institutional and or engulfing candle. Okay. So if you guys see this clear as day, we have a gigantic green candle that showed a lot of momentum in the market. To be exact, this is actually about a 105 plus pip move, okay, in 1 hour. So the thing that you need to know is certain pairs should not move in a big chunk if it's not something that's going to be out of the normal. So USDJPY moving 100 pips in an hour is a little out of the normal if you look at the size of this candle compared to all these other candles over the course of time, right? The next closest candle to this, I mean, it may be something like this, but that's still not as big, to be honest. So these are the things that I'm looking at to be able to gauge, okay, this might be a regular movement in the market. So the market did show us, you know, an extreme drop of about 300 pips roughly. But now what it might be doing is it might be getting ready to give a retracement, right? The market might be getting ready to give a retracement on this bullish, right, overall move, but it's looking to be able to start selling off. So what I'm noticing is what we could do is if this market is showing us that maybe it wants to now start selling, okay, it could be as simple as if you look at the Fibonacci, in order for this market, right, to continue dropping, it might, you know, give a retracement in those zones that we normally look for, which is going to be the 61.8 to the 88.6. So for us, we could actually be looking for a short-term buy, right, to be able to take the continuation of the sell. Now, me personally, I'm usually just going to pick one direction. I don't want to take a buy to then look for a sell. I just want to take the buy or I just want to take the sell, right? If the market, you know, hits this zone and continues dropping, if I see another opportunity that makes sense for me, I'll get in. But more so, I'm really just looking for the bias of the overall move, which is to continue buying it back up. So now that I've actually gotten all this information, the next thing I want to focus on is this institutional candle that you see right here. Okay, so there are a couple of different indicators that I actually like to use. One of my favorite indicators is going to be the TDI, but since I have not yet made a YouTube video about that, don't want to take up too much time trying to teach that from scratch because it does need its own separate video. Okay, so the two confirmations that I usually focus on initially, even though what I want to be able to do is I want to be able to break down things in more detail because the simple way that I look at the market may not be best to teach to people that still don't really understand what they're looking at. So two things I like to look at. I like to look at divergence and I like to look at extremes. Okay, so divergence, right, and extremes. Now, whenever I say extremes, basically what I mean is if you were to use the RSI, right, the RSI is basically going to show you guys exactly how to be able to take advantage of the extremes being hit. Okay, so if you look at this purple box, right, this purple box up in here, right, usually the majority of the time the market is going to stay within this purple box, but you are going to have some instances to where it comes out on either side, but you have to know that it is ultimately always going to come back in the purple box. So if we look at this white line, right, in these two different scenarios, you can see the white line actually came outside of the purple box. Now, when a white line comes outside of the purple box, it needs to come back in. So what you're looking to do is you're looking to take the momentum back into the purple box, but it's going to reflect on the chart. So if you notice, right, whenever the market came outside of the purple box on the downside, what direction does it have to go in order to get back inside the purple box? It needs to go up. So that would be similar to what we want to see on the chart. We want to see the chart go up because the extremes have now been hit, which means that the market could be getting ready to react in the opposite direction. Okay. Now, the next thing I like paying attention to is something called divergence, right? Divergence is going to work like this. The easiest way for new people to be able to detect divergence is you want to be able to use the line chart, right? So go to the candles, hit the line chart, and then I can actually go from point A to point B. So if I go from point A to point B, you guys can actually notice it looks like it's going down. But if I look at my RSI, right, from point A to point B, in the same instance where basically it's a mirror image, it is going up. So divergence is going to be whenever you see the chart going in one direction and you see an indicator, the easiest one to use to detect it, the RSI, going in a completely different direction, which we can see here. Now, if you don't know, divergence is a really, really handy tool and confirmation to be able to use when you're looking to take reversals. This technically is a reversal. Even though the overall trend is bullish, the short-term trend is bearish. So technically, this would be a temporary pullback into the overall sell-off, okay? But you have to understand that, because if you're thinking of swing trading this, you might hold the trade longer than what you need, and you might miss out on the opportunity to adjust stop loss to break even, or, you know, take some partials, right? So now that we've actually detected those two key pieces that I like to be able to confirm, the next thing I usually look for is an entry candle. Now, my entry candle is going to be one specific formation, which is either the engulfing or the institutional candle, depending on what style you've learned, okay? So I don't need to go any further than this 1 hour time frame, just because since I've already taken this trade in retrospect, I know that this is a time frame that I ended up settling on. So whenever you guys are looking at the institutional or engulfing candle, the body of the smaller candle is basically going to be your entering opportunity. So some people like to be able to mark up the entire zone and wait for the market to physically get there, start seeing some sort of rejection, and then they want to be able to get in. For me, I like to be able to break it down to where I can find a precise entry, and then I can set a pending, which is either a buy limit and or sell limit. Okay. So for me, right, usually what I like to be able to do is I like to be able to utilize the Fibonacci tool, but not the Fibonacci tool that I was just showing y'all, right? A customized version, which is going to be the 50%. So this Fibonacci is going to show me the equilibrium of the candle, which is usually the sweet spot, the sensitive spot, the most reactive spot, which is the 50%. So what I usually tell people is you can actually refine your entry from the entire candle to the opening and the 50% of the candle. So now you actually have a way more accurate zone to be able to look at for the market to pull back to. So at this point, if I were to simply hit play, you guys are basically going to see whenever the market returns back, right? Notice how the market ended up coming back to this box. It's rejecting perfectly, giving you wick rejection, wick rejection. So some people, they want to wait to get the wick rejection and then they want to execute by market. You can definitely do that. So now you know you can actually mark up this zone ahead of time. And you can wait for the market to get here and then execute by market. Now, others like to be able to set it and forget it like myself, which is exactly what I proceeded to do. So if we finish watching this, this market actually ended up running about 50 pips in profit before it pulled back a couple of times. So this right here would have been the peak whenever I would have taken partials and then I adjusted my stop loss to break even. I'm personally not a person that holds my trade all the time to TP. Some people literally hold the trades either TP or stop loss. There is no in between. For me, there's definitely an in between. So usually when I get up a good amount of profit, I break some type of structure. This, in my opinion, was a lower time frame structure level over here. If I go to like the 15-minute time frame, you can clearly see this was a structure level that had been broken. So this was valid enough for me to be able to go ahead and take partials and adjust my stop loss to break even. Now, the market ended up returning back to the same zone multiple times after the fact, as you guys can see. This was our initial entry, right? It ended up coming back again, right? And then it came back one more time before it's currently sitting where you currently see the market at now. So all in all, this is exactly how I was able to come, you know, look for the opportunity and take the trade. Now, please be aware, what you guys need to be doing is you guys need to subscribe to my Telegram chat, which if you go follow me on Instagram at official Tyree Samuels, you guys can go click the link in my bio and then join the free Telegram chat. On top of that, you can actually look for my Telegram link in the description below of this YouTube video. So if I scroll, you guys can actually see, right? I sent out 2 trade ideas last week. One of them never activated. I said delete. It would have been Euro USD. But the one that put us in the money, right, the sweet spot, would have been Usdjpy, which you guys can clearly see here. So you guys see I had it marked up and I was showing you guys exactly what to be looking for. And this, yet again, is another example of me being able to break down an opportunity you guys had the ability to take. But, you know, some of y'all just come to my YouTube videos and you don't apply. So hopefully now that you see, you know, we getting money, you guys are going to start applying the information I'm giving y'all. So with that being said, if you guys came to this video as usual, which I know you did, and you learned something, don't be shy. Go ahead and hit that subscribe button, because I want you guys to stay up to date every single time. You know how bad it hurts me to know that I dropped a video and you don't even know that I dropped it until tomorrow? It hurts my feelings. And I don't want you to hurt my feelings. And I know that you care too much to hurt my feelings. So since you don't want to hurt my feelings, why you hit the subscribe button? Go ahead and hit that thumbs up as well as the like button, because YouTube needs to be able to see that you guys are getting value provided to you. And that's one of the main factors that they can use to determine the gauge of, you know, the value that's being dropped. So with that being said, guys, you guys already know the motto. I'm going to see you guys at the top, not from the top, because the bottom is way too crowded. See you when you want to be you. Peace.